Connect with Chakri Lokapriya as well, who's joining in on the show to get in his outlook on the markets. And Chakri, good to have you on board. Let's begin then by talking about the HDFC Bank merger date, July 1st. That certainly did a lot for market sentiment as well and spurred us all the way to the 18,800 mark.
Yes, good morning indeed. And, now the overhang is largely removed now that we have a date, and it's going to be the 10th largest bank in the world after the merger. And it'll have close to about 400 billion in assets. And as costs are going to come down because of the combined entity costs, and therefore the margins are likely to move up. As a result of all this, I think as we reach the date of the listing of the new entity, HDFC Bank, because the arbitrage between HDFC and HDFC Bank also is narrowing. I think for HDFC Bank, from here on, it'll trade on its fundamentals, which is higher margins and higher loan growth.
Okay, that's the take coming in on HDFC Bank merger. Finally seems like the sleepy giant is going to wake up and you are going to see some active participation coming in there. Chakri, I want to talk about Bajaj, especially in the backdrop of the launch of Triumph and Scrambler in London and soon here in India on July 5th as well. Could this really be that game-changing moment as you had in the past with the Maruti when it came to India first? Could it be that moment for Bajaj? And could it really compete with the Royal Enfield by any chance?
Yes, Asha, I think, Triumph is an iconic brand. It's coming back to India through Bajaj again. And it's a well-known brand, not just in India, but also in the UK and other overseas markets. So now that you have a fresh push, I think it clearly is a challenge to Royal Enfield. And this brand will see a lot of traction because it's a name very well known and add to the export volumes.
Chakri, why SBI franchise stocks are underperforming? Last year it was HDFC franchise. Ye coincidence hai. There's a time when all Tata stocks do well. There's a time all Mahindra stocks do well. There's a time when all HDFC stocks don't do well. Right now it's all SBI stocks which are not doing well. All are different businesses, but the market treatment is the same.
You're right, Nikunj. And in the case of SBI, it's partly, I think, to do with the expected credit loss to be included in the provisions. That news has been kind of an overhang on all the PSU banks. It's just a discussion paper, but that matter still seems to be out there. Second, the banks have had a very good run-up. If you look at the last 1 year performance of all these banks, SBI included, very strong performance. But I think hopefully, because I think today there was a credit upgrade for some of the banks, SBI included, and that will act as a catalyst because clearly the valuation in its favor, the balance sheet in its favor, and what they're doing in the digital space with Yono is actually quite remarkable, and they'll gain not just market share, but also margins.
So interestingly, Chakri, Sun Pharma is the only one which stands tall in terms of giving market-beating returns. What has Sun done in your book, which is making it stand out?
The pharma as a space is clearly which we have not focused on. But in the case of Sun Pharma, they separated out their research division. So they created some amount of value, and they moved down the vertical chain in terms of making their generics more complex, which gives them some amount of margin protection. That also gave them some amount of pricing pressure as far as the US markets is concerned. So I think some of the steps taken by Sun were company specific, which clearly helped in the stock performance.
That's the thing, right? I mean, you're talking about the infra boom. We can see that all around us here in Mumbai for sure. It's these small stocks which actually have the potential for that big alpha, and some of them already have given you that kind of return.
Indeed, and because with the economy recovering and elections, so many elections in states, there is a lot of construction activity, and also the confluence of factors. Post-pandemic, bunched up contracts all came on board, and these companies, in spite of the run-up, they're still trading at fairly reasonable multiples, 12, 13 times multiples. One of the biggest factors for these companies has been the cost of funds. Cost of funds last year was lack of availability, peak of interest, didn't know the peak of interest rates. Now we are close to all that cycle coming to an end. That is the peak of interest rate cycle, which helps their margin significantly. And so therefore, I think these stocks, while they have had their run up, I think still will continue to do well.
We were talking about the insurance names and HDFC Life. HDFC Limited has bought 1.5 crore shares at a price level of 667 thereabouts. So that's the other stock that you may want to look out for. There's LTI Mindtree. Their arm Foster has announced a new integration with Snowflake. Besides that, there is all the buzz around the index inclusion for LTI Mindtree. So that's the other one in focus. And TCNS Clothing as well, wherein the Competition Commission has now approved the acquisition by Aditya Birla Fashion. So that's going to be another stock which is going to be in focus this morning as well. Sapphire Foods, this had a block deal yesterday. Goldman Sachs, Societe Generale, Nomura India have all been buyers in the block deal. So look out for what this stock as well does in trade. And then, of course, we were talking about pharma names. So look out for what Gland Pharma as well does in trade. US FDA has issued one observation for one of their facilities. So look out for that. And then, these are a couple of stocks which are in focus. And by the way, Titagarh Rail as well. This has got another LOA for a project worth about 857 crore rupees this time around from Gujarat Metro Rail. The news, of course, came in yesterday. That's going to be the other stock in focus. Chakri, still convinced about the railway and defense story as a long haul?
Indeed, we spoke about it last time. I think the stock will continue to do well. Even after all the run up, it still trades at about 18 times, 17, 18 times. Earnings growth is going to be north of 30%. And the order book pace is likely to continue to accelerate, even if it does not. The order book itself is so strong for the next 4 or 5 years. And they're also moving into high margin businesses. So a combination of all these factors, I think these stocks continue to do well.